Welcome to lesson 5 of business accounting, and in today's lesson we will start to classify the costs that we normally have in cost accounting. Our agenda for this lesson is to classify the cost according to their nature, according to timing, according to their function, and according to their behavior. I think it would be a good idea if we do a simple calculation before we start with more theoretical work. Now, in this calculation, we have a business manufacturer and he manufactures office furniture, and the main product is an office desk. Now, remember, the main product is an office desk. What do we need to manufacture an office desk? We need 2 hours of specialist carpentry labor, and we need 1 hour of assembly. And you will see that the rates are different. The specialist carpentry labor is $200 per hour, and the assembly is only $80 per hour. And then we also need material. We need 20 meters of wood at $50 per meter. So now the requirement is, first of all, to identify the cost object. Remember, what's the definition of a cost object? It's any object that you can allocate costs to. So what are the cost object in this example? And then we need to calculate the cost. First of all, we can identify the cost object as the office desk. So I will only write it there. The cost object is the office desk. All right. And now we need to start with a calculation. Now, where do we start with a calculation? Now, first of all, what do we need? We need 2 hours of labor at $200 each, and we need 1 hour of assembly. So let's quickly do that calculation. So the labor is 2 times 200 equals 400. And these are all Namibian dollars. And we also need 1 hour of assembly, so that will be 1 times $80 equals 80. Okay. And then we also need material. Let me just write there labor. And we need material. And the material was 20 meters at $50 each. Let me quickly write it down. So it is 20 times 50, and I believe that should be $1,000. So what is the total cost of this office desk? The total labor is 400 plus 80 is 480, and I will use material costing me 1,000. That means the total cost is then 400 plus 80 plus 1,000, and that will give me 1480. Now, our first classification is according to nature. Cost can be classified in various ways and depends on management and reporting considerations. Now, the first classification is according to their nature. So we have manufacturing and we have commercial costs. So the nature of the cost is either manufacturing or commercial. Now, what is manufacturing cost? Those are all the costs directly involved, and remember, directly involved in the manufacturing of the product. For example, it's the direct material, the direct labor, and the manufacturing overheads. Those are called manufacturing cost. It's according to their nature. But we also have cost that is commercial of nature. So these are all the non-manufacturing costs, and it's usually the supporting functions relating to the business as a whole. And you can then split or divide commercial cost into admin cost and marketing cost. Just to summarize our classification by nature, we will have total cost that we can divide either into manufacturing cost or commercial cost. Manufacturing then consists of your direct material, direct labor, and manufacturing overheads, and this has to do with the manufacturing of the product. Then we also have other costs, which is commercial in nature, and they are your admin cost and your marketing cost. If we look at that office table or that office desk, we calculated the manufacturing cost, but then there will be administrative costs also, and that can be the rent paid for the premises, it can be the electricity used, it can be like telephone expenses, stationery, all of those. And then you also need to advertise or market that office desk. So those costs will then be classified as commercial cost. In this example, I want you to use that information and now to identify the direct cost of the bakery. So let's say we have a bakery and we bake bread. So what are the direct costs involved for the bread? That will be your ingredients, and it will be the baker that needs to bake the bread. All these, the cashier, that will be admin cost, rent will be admin cost, water and electricity admin cost, and depreciation also. So all of these other costs can be classified then as commercial cost, while your ingredients that you need to bake the bread and the baker that needs to bake the bread, those will be manufacturing or direct costs. We can also classify cost by timing, and that will be then your period cost and your product cost. Now, remember, if you have a cost, you will now, if you decide to classify it according to timing, then it will be product versus period. Now, period cost has to do with a given accounting period, and those are normally your commercial cost. So now you can see how it relates to the nature also. Period cost, normally your commercial cost. Product cost is the cost associated with the manufacturing, so those are your manufacturing cost. So in other words, product cost equals your manufacturing cost, and period cost equals your commercial cost. We can also classify the cost according to their function, and their function can be direct labor, direct material, and manufacturing. So there's another exercise, and I hope that you are ready to do it. Yet another exercise. We can quickly do this exercise. So get your pens out and start to do this exercise. So in this exercise, we have direct labor, we have direct materials, and we have manufacturing overheads. And you will remember that these were your product costs also, or your manufacturing costs. All right, so let's quickly add up all our costs. We have direct labor of 100. I will only do it there. And remember, we are talking about Namibian dollars. We have direct material of 200,000. And we have manufacturing overheads of 50,000. So what is the total cost involved? If you add this up, you will get 350,000. Now, if I take the 350,000 and I divide it by my number of units, which is 2,000, then I will get to a total cost of 175 Namibian dollar per unit. So this is telling me to produce or manufacture 1 unit will cost me 175 Namibian dollar. We can also classify our cost according to behavior, and that is telling us that costs change with a change in volume or activity. So when the activity levels is going up, the cost will go up. When the activity levels is going down, the cost will also go down. We have under behavior a variable cost and fixed cost, and then also a mixed cost, which basically consists of a fixed and a variable component. And then the last one is our step cost. If we look at the first one, we have a variable cost changes in direct proportion to activity levels. So if I'm making 1 cup of coffee, I will use less coffee than if I'm making 2 cups of coffee. So for 1 cup, I will use 1 teaspoon of coffee. For 2 cups, I will use 2 teaspoons of coffee. So that it changes directly in proportion to activity level. Fixed cost, on the other hand, does not vary with production levels, and they are usually period cost or commercial cost. And a very nice example can be your rent. Whether you make 1 cup of coffee or 2 cups of coffee, your fixed cost, your rent, will remain the same. But remember, we will still allocate that total amount of rent to the number of units. So if I make 1 cup of coffee, I will need to allocate the full amount of rent to 1 cup of coffee, or I can allocate it to 100 cups of coffee. So the fixed cost will remain the same, but the fixed cost per unit will change with activity levels. The next one that we will look at is the mixed cost. Now, in a mixed cost, you will normally have components of a variable cost and a fixed cost. If we look at the cell phone, now I want you to consider a cell phone contract. So let's say you have a MTC contract. Now, with an MTC contract, you will normally have a fixed fee, and you will also pay for the data that you use. Now, the fixed fee is then the fixed cost, because whether you use data or whether you make calls or whether you just put the phone in the drawer somewhere, you will still have to pay the fixed fee. So that is your fixed cost then. Then if you look at the data that you will use or the calls that you will make, you will pay for those extra. So if you use a lot of data, if you make a lot of calls, then your variable cost will increase. But if you don't use the phone, you don't make any calls, don't use any data, then you won't have any variable cost. So I will say here my variable cost is then the data or the calls. If we look at step cost, those are fixed costs again that respond in a step manner. That means that if we look at the storage space, we can maybe store 100 office desks in the storage space. But if we have 120 desks, then we need to hire additional storage space. So the storage space in this example is a step cost because it responds in a step manner. Up to 100, you have one space, one storage room, and then exceeding 100 office desks, you will use another storage room. Now, this is then the end of lesson 5. During the past 2 weeks, you learned some very important definitions and concepts that we need to go forward when we start to calculate cost. You will need to remember or to understand all those concepts and definitions.